All right, welcome back. Welcome back to another episode of the Black Bullion Show. Today, Kitco interviewed Rick Rule. Now, Rick Rule is one of my favorite. Obviously, he's with Sprott, but I like to say he's also one of my favorite thinkers of the moment. Just the way he thinks, you can tell this man is really into philosophy, and you can tell that that is the reason why he is in this market in gold and precious metals. Um, so before we get into it, I just want to say if you want a quick synopsis of the video, check it out in the description below. If you don't want to watch the full thing, please like the video. Please subscribe to the channel if you are new. And when you like the video, it helps to get this economic evangelism out there. And let us begin. So David Lin of Kitco News asked Rick Rule, who some of you guys call or say Rick Rules, which I also like to as well, asked him, where do you see gold headed? And this was Rick Rules' response. He said, higher. Gold moves as a consequence to people's lack of faith in the ongoing purchasing power of their fiat currency denominated savings. QE debases the currency. Excessive debt and deficit makes people demand a higher yield on their bonds. At the same time that bond yields are at artificially low prices. My experience has been that the most important determinant to the gold price is real interest rates. And real interest rates are negative. By way of example, the yield on the US 10-year Treasury as of today is 60 basis points. Now, I think you might have done this interview probably on the day before today, so Tuesday. That's 0.6%. The Congressional Budget Office, CBO, suggests that the purchasing power of the U.S. currency is declining by 1.6% a year. So the value proposition is you lend the U.S. government money for 10 years, and they absolutely promise to reduce your purchasing power by 1% a year for 10 years. Now, that doesn't seem like a good deal to you. To me, does it seem like a good deal to you? So that makes you wonder, okay, well, as far as all of the safe haven assets that people tend to go into during times of uncertainty, the two biggest kids on the block tend to be 10-year Treasury bonds and gold. So gold's main competitor right now are the 10-year Treasuries. And as you will see in some data that I will show you in a second, you'll see that they almost act in just like polar opposites. Like almost every one of their moves, if one goes up, the other goes down. If one goes up, the other goes down. It's almost like a dance that they do. It's really interesting and beautiful to watch. But here actually is where we are today. I'm recording this on Wednesday, and we are at 0.702 for the U.S. 10-year Treasury note. Now, again, this isn't adjusted for inflation. I'm going to show you what the real U.S. 10-year Treasury note is in a moment. But I just want to remind you guys that in order to figure out the real rate, you have to use a formula that goes R equals I minus pi. R equals the real interest rate. I is nominal interest rate. Pi represents the inflation rate. So just like Rick Rule said, if the 10-year Treasury is, well, now it's at 0.702, and the Congressional Budget Office is saying that inflation is basically at 1.6, then pretty much if you get a bond right now, you will lose purchasing power 0.9% a year for 10 years. Whereas yesterday it could have just been 1%, or it would have been worse by a tenth of a percent. So that is a quick way to take a look at how to solve for that. But if you don't want to do all that math, you can go straight to this website, which is the Fred Economic Research website. It's really great. fred.stlouisfed.org. And here's the 10-year Treasury inflation index security, constant maturity, and again, it is inflation and it is adjusted for inflation. Now, this is where we are right now. We are at negative 0. Or that was what we were on Monday, negative 0.43. But in general, you can just tell that this Treasury has just been on a downward trajectory since the latter part of 2018, towards the end of the last quarter of 2018, and it's just been on a downward trajectory ever since. Now you might be wondering, okay, what about gold? What was gold doing during that time? Well, here's gold, and here's gold during the latter part of 2018. As you can see, it's kind of not doing much here, just kind of going up and down, just kind of a little bit stagnant. But then it starts to kind of go up and go up and go up and go up. And then take a look at what happens here in March of this year. It goes down around March 19th, March 18th or so. Take a look at what happened during the 10-year Treasury during that time. So it went down, and then during that time when gold went down, the Treasury went up, 10-year Treasury went up, but then it went back down again, and it's been continuing to have downward pressure on it, downward momentum, whereas gold has been having upward momentum since that period of time. So as you can see, there's almost like this polar opposite, just dance that they do. So as you can see right now, people are looking or going more towards gold right now than they are the U.S. 10-year Treasury. So that's good. That's good. And let's take a look at what happened in previous markets. So this is the gold price going back to the last recession here. Now, as you can see, during this period of time, gold went up in the beginning, then it went down, and then it went up during this recessionary period, then kind of went down, and then just went all the way up after that recessionary period. Let's see what happens with the 10-year Treasury. This is taking a while, All right, here we go. So in the beginning, it does the opposite of what gold did. It went down, then it went up, then it went down, then kind of went back up, and then it just went down after the recession ended. Pretty much the opposite of what gold did. Up, down, up, kind of slightly down, then went up. So if you want to have an idea or a feel of where gold might be heading, another metric that you can take a look at without having to do the constant math of R equals I minus pi, is just take a look at this chart here, the 10-year Treasury adjusted for inflation, and you can just take a look at where gold will likely be heading. Now, let me know what you guys think. Do you guys think that there's another competitor that gold may have that will win investors' favor for this year? Or do you think that, I like to take a look at the U.S. 10-year Treasury adjusted for inflation to see where gold will be heading or where gold has been heading, just overall trajectory. All right, guys. Thanks again for watching this video. Please give it a like. Please subscribe if you are new. It's Black Bullion.